Hello and welcome to the New Champions Dialogue 2022. This is the session, China Economic Outlook. My name is Tian Wei. It's such a pleasure to be the moderator of this important session. This session is a joint one between World Economic Forum and CGTN. The global economy has been experiencing quite a roller coaster ride over the past few years. And the important part of the global economy is that of China's. It is not only important for Chinese economy to prosper for the Chinese people, but also for the international community. So how to understand the short-term opportunities and challenges and the mid- and long-term outlook of the Chinese economy? I'm so glad today to be joined by a very strong panel from different parts of the world. Nicolas Aguzin, who is the Chief Executive Officer of Hong Kong Exchanges and Clearing. Benedict Sobotka, who is the Chief Executive Officer of Eurasian Resources Group, coming from Luxembourg. Zhu Min, who is the Chairman of the National Institute of Financial Research with the People's Republic of China. Of course, Mr. Zhu is also member of the Board of Trustees of the World Economic Forum. These panelists are going to bring us a great discussion on the China's economic outlook. Not only that, today at the end of the session, we're also going to welcome remarks and thoughts coming from Jeremy Jurgens, who's the Managing Director of the World Economic Forum. What a pleasure to see all of you. Now, let's jump directly to the discussion. Professor Zhu Min, tell me more about how do you look at the short-term growth rate of only 0.4% for the second quarter this year for the Chinese economy? What does that mean for opportunities and challenges for the rest of the year?
Yes, you're right. I think the second quarter growth is really weak, and also the first half year of this year's economic growth was not very strong. But I think the key was, if you're looking for the short term, I think it will be the stabilizing. I think the whole economy is stabilizing. And if you're looking for the monthly data, right, April is really weak, May pick it up. And June was quite strong on 3.9% GDP growth. If you're looking for the others, power consumption growth, jump 4%. Service MPI jumped 7 percentage points. So we saw things are stabilizing, and particularly on the supply chain, and also working smoothly now, almost full capacity. So I think the whole thing is stabilizing. I'm very much looking forward.
Dr. Zhu Min is already setting a very strong stage for us, talking about different important sectors of the Chinese economy, not only the realities, but also the growth, possible growth engines. Mr. Aguzin, coming from the capital market, how do you see the two words Professor Zhu just mentioned? One is stabilizing, the other is policy tools.
Yeah. So I would agree, 100% with the comments that Professor Zhu Min made, in the sense that we are seeing warming up in different sectors. We see this in the capital markets. We're starting to see some inflows into the mainland. For example, if we look at exports and the trade surplus that we've seen, particularly June, was just like an outstanding month. I mean, almost 100 billion of trade surplus. That is forcing international investors to play a little bit of catch up, because what we've seen is international markets having a tough performance, and Chinese markets, the domestic markets, actually performing fairly well in the last couple of months, especially June. So I would say that will start potentially a wave of making sure that some of the international global investors play a little bit of catch up. So I do think that there is a warming up of the environment, I would say. Now, from a policy tools, as Professor Zhu Min mentioned, China has a lot of policy tools at its disposal to use. They've been using several ones in a consistent fashion. And I would say that our outlook is for a stronger second half.
Interesting. Catching up games, that's being proposed by you, Mr. Agouzine. Let me go to Mr. Sobotka. Is that true, a catching up game?
Yeah, I can only agree with what the Professor Zhu and Nicholas is saying. Is we remain
this is
very
difficult.
optimistic.
It's a panel that everyone agrees with everyone.
Well, I'll come to it.
Putting jokes aside, please go ahead, sir.
Well, generally, we share the optimism about China's economic prospects. The first half of the year obviously was tough, but I think that's been mainly related to single occurrence events. China remains to have a very strong production base, strong operational environment, very strong manufacturing industry chain, and huge consumption potential. So for us, as one of the larger producers of materials into China for the new energy transition, what we're also seeing is that China is now transitioning much more into a consumption-driven economy, particularly in the context of building back better post-pandemic. So we are very positive on the midterm and long-term outlook of China. And the business community is really asking the question outside of China, is China going to come back and save the world economy again by producing more growth? And I think the answer is yes. But in addition to that, we're also expecting to see that China will be a major driver for reducing global inflation, which is one of the biggest political issues and concerns outside of China, is inflation. And of course, some of it is induced by hydrocarbon inflation, hydrocarbon price inflation, which is already coming down a little bit. But because China has such a large scale industrial capacity, it is probably the single largest country that can actually address global inflation through more efficient supply chain and increase in production. And that's particularly the case for anything related to the energy transition. China is the largest producer of batteries, is the largest producer of energy transition technology. So it will help us drive down what we call the green energy, greenflation, right? Because there's such a tremendous amount of demand coming on green energy transition types of investments. We have to work very hard that greenflation doesn't kill the energy transition. And China will play an incredibly important role in that transition.
Several points you already mentioned, which are very crucial for the latter half of our discussion about the prospect and the outlook. But let me focus once again on the immediate term. Dr. Zhu, we know that the pandemic has been putting quite some pressure on the growth of the Chinese economy, and also some questions in the minds of investors from all over the world about the prospect of Chinese economy for the rest of the year. Now, as an economist, how do you see that? Because
the globalization, right? We have a various, now today is EA.5 now, and also EA2.5 and the variation also there. So there's a lot of uncertainty. I think if you're looking for the global in Europe, in the States, cases really, so that's the concern. But I think that for China, most of the important things in the dynamic zero policy is always there. But the key issues, all the localities implement this dynamic zero policy. It varies across, the regions, countries, cities, even townships, right? But I think, in the first half of this year, particularly, the clarity and transparency really improved on the implementation side of this dynamic zero COVID policy. So I think that's good. That will provide a very important confidence to the market and to the people, to the company. We don't know how the pandemic will, evolving. But as long as the policy is clear, people know how to deal with it. I think that's the key.
Mr. Agouzine, how do you see the, quite a philosophical relations between the short-term difficulties and challenges, like what we mentioned earlier with Dr. Zhu, and the optimism and confidence of China's economy? How do you look at these relatively philosophical relationships?
So, in essence, being a marketplace for this part of the world, we're used to these fluctuations of like short-term versus long-term, and we have to deal with markets that sometimes are very difficult in the short term. I'll just give a little bit of an example. Maybe going a bit more towards the capital markets, but it does reflect, the economy. I think it's much more difficult to predict probably the next 6-12 months than predicting the next 10 years. So I'm fairly confident that if you take a 10-year view, that the GDP of China will approximately double. I mean, and that's fairly logical given all the trends that you've seen, all the investments, the increasing consumption, and the elements that are driving increased demand. Now, if I translate that into how that plays with the capital markets, today's capital markets in domestic China, between bonds and equities that are publicly traded, it's about $30 trillion US. Now, looking 10 years and doing some simple calculation and estimations of equity capital markets to GDP, the development of the asset management sector, the redistribution of allocation of assets from the cash market. You know that in China, it's very normal to have a lot of your money in just plain deposit accounts. And that some of that is going to expand towards capital markets. There's a lot focus on the real estate. Home ownership is very, very high in China. So the household have a lot on the real estate investments. As that starts shifting to other sectors and the capital markets start playing a bigger role in the economy, it is very easy to see how the $30 trillion US of capital markets of today in the next decade will probably become over 100 trillion.
It takes more than a crystal ball, I guess, these days to look at the short term, what's likely to happen. Yet, go to you, Mr. Sobotka. Confidence for any economy is very important, as precious as gold and probably even more. So uncertainties and also a very unique economy like China, how do you see, the amount of confidence that when we are talking about this topic today?
The confidence in the Chinese economy remains very strong among the international business community. I agree that the current volatility is absolutely unprecedented. I mean, we haven't seen metal prices or commodity prices drop 30-40% within a month in history. I mean, this is one of the biggest drops in commodity price drops in the history of the world, and it's unjustified, because fundamentally demand is very strong, and fundamentally the confidence in the economic development of China is very strong. So yes, and you are seeing also the consumer prices in China are rising much more modestly than they are outside of China, and that's important, because what you're seeing in many of the Western countries, you see just runaway inflation. However, it's not actually the same as the expected inflation by consumers. So the consumers actually have more confidence in the future than what the current prices are suggesting. So that's actually good news. So in the midst of that surging global inflation, I think that China is again a beacon of stability. Of course, the biggest challenge is COVID-19. It remains one of the biggest risks to the economy, particularly on the consumer side, and also supply chains. What's been really hitting us also as exporters into China and importers from China are some of those uncertainties in the supply chain, but we expect those to smoothen out. And that will also drive down inflation and also help shorten supply chain issues that we're seeing today in many of our markets and customers. That needs to be addressed.
Mr. Aguzin, coming from the capital market, how do you see the willingness in content of policymakers from various economies to deal with the current problems like the inflation problems, the global growth rate issues, and also, of course, fighting stagflation, to say the least? Please, sir.
If we want to make sure that we continue having global growth, we have to continue working together, trying to make those connections, try to increase connectivity between East and West. We think it's critical. We are incredibly concerned about decoupling, deglobalization around every country using their own technology. In that world, it's going to be hard to control inflation. Everything is going to be more expensive. It's going to be more inefficient. And who's going to suffer? Probably the lower classes are going to suffer more, which is going to create not only economic instability, it's going to generate political instability, polarizations of views, thoughts, and obviously that is quite dangerous and concerning. What do we need to do to make sure that there is continued dialogue, communications, connectivity between different continents, and how each part should play a role in that area? I'm encouraged by seeing how certain sectors, and let's take sustainability, I mean, there is an effort to try to do more together, to try to coordinate efforts. But aside from that, I don't see much. And obviously, technology is one area that everyone is being very, very defensive.
Thank you, sir. But I want to dig a little bit more about the connectivity issue you talk about, especially with the angle of the growth engine, the green economy, and also some of the latest technological development, as well as the prospect of 2030, 2060 regarding carbon plan in China. How do you see that is having an impact on the capital market? How much potential is there, sir?
Yeah. I mean, there are some areas where we're seeing tremendous growth. I mean, let's say, for example, take bonds offering, green bond offering. I mean, those have shot up significantly. So from a capital point of view, relying on green bonds has been a much more important thing. And then you look at certain sectors, like, for example, we take EVs. EVs has been a huge driver of capital issuance. Particularly China today. I mean, last year we had 3.3 million vehicles sold in the country, and we see this as a continuation. Then you look at some of the investments that are going to be needed around renewables, sustainable energy generation. That is going to double between today and 2025, just in the next 2.5 years. So that will require capital markets to provide the necessary capital. And we're seeing a lot of interest. We've also tried to set up like a carbon council to make sure that we can do more and more in terms of the ability of companies to trade carbon credits. That is an emerging area. I mean, there's a lot more noise than actually things being done. But the reality is, over time, as we get closer to the targets of 2030, 2060, I mean, I would expect that there will be more and more.
Mr. Sabatka, though, how much do you see that could be a growth engine? Right now, the world is experiencing quite some difficulties of energy, and we see even some of the European countries have to take up coal again for generating power for the short term. So how much will that be a growth engine, even for an economy like China's?
The sheer amounts of material that is going to be required to feed the investment that Nicholas has been talking about in renewable energy, in electric vehicles, in energy storage, because all those those infrastructure investments are a lot more material intensive than traditional energy generation, particularly copper intensive. New energy materials such as cobalt, like lithium, and others. Just to give an idea, I mean, there were about 8 million electric vehicles in the world in 2020. The latest forecast is targeting 120 million new energy vehicles by 2030. That's only 7 years from now. So this is a fundamental change, and China is driving this demand. It is the biggest new energy vehicle market. It's the biggest renewable energy market, and of course, China will be leading this for the next 10 years. There's tremendous growth opportunities. For us, we personally are involved in this because we are one of the largest producers of energy materials such as cobalt, where we expect the growth to increase by 20 times in the next 20 years, which has never been done before. The world has never produced so much raw materials in such a short period of time. And that's driven by China, both on the consumer side, but it's also driven by China on the supplier side, which is unique. China is not just the world's largest producer of those materials, it is also one of the largest consumers.
Mr. Zhu Min, I know at this moment when we are talking, we also understand that, trade officials from China and also the European Commission are also talking and discussing with one another. This is just one of those examples how with this important topic, people are beginning to improve their communications. Having said that, though, how much will that be a growth engine?
I think the green issue is the key topic of conversation between China and the US. And I think it's very important if China and US can work together on the carbon neutrality issue. We need to build a new carbon neutrality governance of the world, because this is the complete new world in the future, right?
How is China preparing for that at this moment, Professor Zhu?
China is on the transitional form from classic growth to high quality growth, and also China is pushing for the technology. So I think that China is really committed to push all the way. If you're looking for this year, a lot of investments is on the infrastructure of carbon neutrality. Yes, last year we had a bumping on the coal, on the power issues. This just shows how serious China was committed to this carbon neutrality, right? And so moving forward, this is a huge opportunity for China moving into a new growth model and a growth engine.
I'm sure, Ms. Daguzin, that the capital market is so eager to quote-unquote cash in, but rather to participate in this process. And of course, the Hong Kong Stock Exchange plays a connectivity role in that regard as well. Tell us more about that.
Hong Kong has a very, very unique position. I mean, it's the most international city of China, and at the same time, it's the most Chinese city outside of the mainland. So that unique position allows for things to happen in Hong Kong in a way that international investors are very used to. There's many issues, including the language, common law, I mean, the infrastructure, institutions. And so it's very easy for investors to participate in this market. And we've seen that over the years, it has become an asset management center of the world. So today, from a wealth management center, there's like about $4.5 trillion being managed out of Hong Kong. From a hedge fund point of view, there's like 450 hedge funds from all around the world that came and established and made Hong Kong their home. A great vibrant market that has developed that many people have discounted for many, many years. So many people called for the end of Hong Kong. And it's not happening. The resilience of Hong Kong is remarkable, despite all the unrest, pandemic, geopolitics, and all the global ups and downs. I mean, we've seen, for example, just in the last 2 years, the volumes in Hong Kong. In 2019, it was in our market, $89 billion, $87 billion per day traded. Last year it was 167, almost doubling the volume traded over the most difficult 2-3 years that you can ever imagine.
What about for international investors, Mr. Sabatka?
I think what is important that even though there are potentially geopolitical issues temporarily, that we can only address the challenges, particularly for the energy transition, we can only address those in a collaborative fashion. And China needs to be sitting at the table. Because China is the leader in the energy transition and the biggest carbon emitter, so it has to be at the table. And that's why it's so important to have these collaborative cross-value chain organizations. Actually, it was here at the World Economic Forum that in 2016 we founded the Global Battery Alliance, which is a multi-stakeholder organization exactly along those lines, with involvement from upstream companies, downstream companies, host governments. The Chinese government is involved. The United States government is involved to bring together, today we're 120 organizations spanning the entire value chain, to establish a sustainable energy storage value chain, which is incredibly important to make the energy transition real. And that can only happen, this Global Battery Alliance that we founded at the World Economic Forum, it can only happen to achieve the targets for energy transition, for better traceability, for better sustainability in the increase of the supply chain, if we work together.
Before we wrap up the panel part of the session, I would love to have all of you to share with us 2 keywords, if you can, or one, about the word that comes to your mind when we are talking about China's economic outlook.
I think it's the economic transformation, more greener, and also high productivity. And also, if I may have the second word, I think it's international collaboration, particularly on the carbon neutrality side.
collaboratively capturing the new energy transition, which we believe is the biggest opportunity for global economic growth and inclusive and just growth for the next decade. So we have to do that together.
Maintaining connectivity.
I want to thank the three of you really to share with us not only the information, but also your insights as a result of decades of work in your own fields. But I'm also very glad now to be joined by Jeremy Jurgens, who is the Managing Director of the World Economic Forum. Jeremy, I see you carefully listening to every speaker during the panel, and I'm sure you have a lot of thoughts to share with us right now.
And if I had to introduce my two words, what I took away from this session was actually the global interdependence. Well, we started out the discussion on very much the domestic outlook, the domestic opportunities and challenges. We quickly came into a number of the critical global issues that are actually driving here. Energy, I think that was probably first and foremost there. And as we heard from the panel earlier, we're much more uncertain in the near term than we are in the medium term. But in this case, this medium term extends at least into the next 6 to 9 months, both in the context of energy, but as well as around COVID. Carbon neutrality was also quite important. I also took away the importance of supply chains. Nicola spoke to connectivity. And we could almost think of these less as supply chains and almost more as networks. Again, there's high levels of interdependence. There isn't a singular chain anymore. At every stage, there's multiple other connections that are in place, and a disruption in any one of those leads in disruption to the entire system there. We will be working to promote cooperation among both all countries globally, but also across industries and political actors. And I think together we can actually help contribute to an effective continued global growth, both in China as well as beyond.
At this moment, when the world is so divided, it is heartwarming and creating confidence, shall I say, from our panel today that I see more consensus and share of thoughts among our panelists and beyond. Thank you so much for being with us. Bye for now.